I thought it might be interesting to give you a bit of insight into what it is that we're looking at when we go ahead and transact at New World Oil and Gas. Every company has its philosophy and its aims. We are looking to build a mid to large sized oil and gas company. And with every transaction that we look at, we're considering a lot of different things in order to be able to achieve that as part of our transaction. And these variables and these things, they change from day to day because the markets change, the opportunities change, and the things that we see in front of us change all the time. But we're looking to try to create a portfolio of highly liquid assets. And these could be liquid in many different ways. They could be liquid in the fact that at the end of the day, you'll be trading or selling liquid products, oil and gas that is. But these could also be liquid in that, as Martin correctly mentioned earlier during his presentation, there are opportunities perhaps to farm down your assets if they're good, and bring benefit to the company to further de-risk or help in financing the development of the projects. And Bill will go into the de-risking factor a little bit later, but we're always looking at this potential aspect, and that's one of the reasons why when we negotiate transactions and deals, we look at ways in order to build up our interest. Because as we build up our interest, we develop and we put together liquid assets that belong to the company and to you, the shareholders. And as we build these up, we're in a position to be able to potentially farm these down. We're also structuring them in this particular manner so that we can we want to ensure that the risk is minimal to shareholders. It gives us an opportunity to de-risk a project, take a look at it, and then decide only at that point whether we will continue investing in that particular project. It gives us a lot of options, and it gives us a lot of opportunities. And I'll give you concrete examples as we move on with the presentation. But the first thing that we have is a screening process. We probably have about 40 different projects that we have on tap at this particular point in time that we're taking a look at. Some of them cut the mustard, as they say, others don't. And there are many different things that you have to go through in order for these projects to actually make it to be a New World oil and gas project. The first is there's a huge filtering process. There are so many projects out there that they're just fake. And you spend a lot of time, effort, and money only to figure out that the party that is proposing the project doesn't have the interest, or the license doesn't exist and is bogus, or so on and so forth. So there's a massive filter. So what you try to do is you try to deal with credible partners and people that you've dealt with in the past, or people that have a reputation, or that you've come to know. And again, we'll go into how we came about our projects a little bit further. And we're also obviously looking for the investment criteria all the time, which is to be in a prolific area, to have partners who are willing to have us operate. And it's becoming easier and easier now. We've been existing on our reputations for about a year, but now we've been operating as operators of these projects for a good year at this point. So it's becoming much easier for partners to say, yes, we will let you operate our project. Then we're also looking for things that complement our existing portfolio of assets. And this could be, for example, on a hedging basis. Our first asset was the Belize asset, which is tied to WTI. Our second asset is the Denmark asset, which is more tied to Brent. So when we're looking at building an interesting portfolio of projects for the company, these things come to mind. We might not want to be totally weighed on WTI or totally weighed on Brent. We want to have a diverse portfolio of projects, and these are some of the things that come into consideration. I think I'll move ahead to the projects that we have, and what I want to try to do is to superimpose them to show how they fit the investment criteria that we have, and to try to give you some flavor for that. If you take Blue Creek, for example, which was our first project in Belize, we dealt with, this was our first project, and coming out of the gates, we wanted a project that was in a prolific basin, where we had confidence in the partners, where we had some, because at that point in time, the most important thing really was to bring an investment or an investment opportunity to the table that would attract and interest the community at large. And I think we achieved that by bringing a project from a jurisdiction that was interesting, was in an underexplored place, which is Belize, but that still captured the imagination of the London market, because Belize is part of the Commonwealth. It was the British Honduras. People felt comfortable with the legal system because, after all, it is the common law legal system. The language was English, and the laws were fairly understandable to everyone involved. So this segued very, very well into a first project for New World. We were very fortunate with the investors, or rather with our partners in Blue Creek, which came through recommendation, which we met with at length, which we had many discussions with, and which we found common interests and developed a common relationship with. It's a long process. You don't just get a deal. It doesn't happen overnight, and it certainly didn't in the case of Blue Creek and in the case of Belize. Danica Resources and Danica Jutland were quite interesting in that, I'm not sure how many of you know about this, but many of the shareholders that were part of the BCE Blue Creek project were also involved in the Danica and the Danica Resources projects as well. So we had the confidence, if you will, in the teams and in the projects because of the people that were involved. The geologists that were involved in Blue Creek were similar to the ones on Danica Jutland and Danica Resources. That gave us a lot of comfort. And it made the transaction process that much easier. You can imagine if you've gone into one transaction and you've learned how to work together as a team, it becomes easier and easier. The barriers of distrust break down quite quickly, and once you get to the second and third deal, things become a lot easier. And they don't always you don't need that relationship to be easy only when times are good, but what you really want is to have a partner for a long period of time. And that's what you have, that's what we've found that we have in these projects. You may have noticed in the last few months we've announced changes to the BC, or amendments to the BCE FOA, which have been very beneficial, we believe, for New World. These things also take time, but they're also very much a result of a solid relationship with the partner. I've been in situations where, and I'm sure Bill has, we've been together in situations where you try to renegotiate a comma on a farm out agreement, and it could cost you millions of dollars in legal fees, and it takes you 6 months, and you don't get it done. Here we actually managed to negotiate some substantial concessions from the farmer partner, because they saw that ultimately we're in the same ship as them. because they want a discovery as much as we do. Their benefit in the project is if we make a discovery, and helping us make a discovery by making it easier to finance our work program obligations is in their best interest as well. So those are just a couple of the dynamics and interests and things that we think about when we're going ahead and looking at transactions. I'd like to say that we have many more transactions that we're considering. The filters are constantly working, but we're also very mindful of the fact that our financial resources and our human resources are finite. We can't overextend ourselves without it impacting the projects that we have on hand. The markets aren't limited in their ability to finance projects as well. So there are projects that we'd love to pull the trigger on, and maybe we can't at this point in time because the financial constraints perhaps are too large. They might put some of the other projects under risk. And then what happens is if you don't pull the trigger on the projects at a certain point in time, you might lose them, and you have to move on to the next project. So it's very much there are a lot of moving parts when you're looking at the transaction process. I wouldn't say that we were lucky to get these three projects. I think that we were lucky and good. Lucky in that you never know what comes around, but you still need to be able to execute them, build the relationships, and manage the relationships, and make sure that you could raise the money in order to keep the relationships going. Bill mentioned that I was going to make an announcement. This is the next point. I'm not sure if it's already been announced or if it will be announced in the next anyways, but you will hear of this very, very soon. It might have, the RNS might be out. But is it out? I'm not sure. Or is it embargoed for? It's already embargoed. You guys are all inside, so but it's too late to trade on it in any case. But the company is readmitting as an operating company, which I think is something everybody has been expecting. But it's taken a lot of time and hard work to get to the point of being able to actually do it. Many thanks to our advisors who have been diligent and helpful. It's been a long process, but what I wanted to explain a little bit is what this means and why we are doing it, and so that everybody gets comfortable with this. You might all be aware of, remember that we listed back in May of 11 as a investment company. An investment company that invests in the oil and gas sector. Since then, as you know, we've invested in the oil and gas sector and brought on a number of projects, earned into a certain amount of those projects, and have started operating those projects. But now we've gotten to the point where we will be electing to drill in Belize, as you all know, and drilling in Belize means that we will be earning into a sizable portion of the working interest in the Blue Creek farm-out agreement, or the Blue Creek PSA, that is. And so we are starting to hit the triggers or hit the class tests of the AIM rules, which say that if you meet those class tests, or if you are really operating, and we are going beyond the operation of a desktop company to a company that is actually operating in the field, you need to readmit as an operating company. And so I think it's very good news for the company. It means that, without this, we couldn't go ahead and drill. So this means that drilling is around the corner. We are just going through all the hoops, but I think You should, if it's not on the RNS right now, it'll be on at 7:30 in the morning tomorrow. And
We hope. Otherwise, you all have amnesia.
Lock us in.
No problem. You're all locked in.
And we will all be seeking your support at the AGM that will obviously come with the readmission, because at the end of the day, it's the shareholders that vote to readmit the company as an operating company, which is you guys. But I'll remind you that if you don't vote in to readmit, we can't drill. So, what's the point of being invested in an oil and gas company if the company can't go ahead and drill? But it's a technical point. I thought it would be a nice announcement for today, because it's obviously a large milestone for the company.